Hello and welcome to another weekly market update after the market closed on the 3rd of May 2019. Here's where we look at the big picture and the short-term picture for the stock market, and that as it affects everything else. We're trying to look ahead really to see what's going on down the line in the economy. We don't want to be blindsided again by anything bad, and we don't want to miss out on any good profits either. So here's a long-term chart of the S&P 500, which is the benchmark index we go by. Along the bottom here you'll see years, and here's the price along this side. Each of these up and down pegs is a week of price action, and that's smoothed out for us by this blue line here, which is the moving average of the price over the last 40 weeks at any given point. So our proprietary system called a brand new bull market here, 7th of November 2016, and said to get out here last October, and has kept us in cash ever since. But as I've been commentating on since the New Year's Day, really, the market has staged a dramatic comeback after looking over the cliff right here, and hasn't stopped going up really since. And so we're probably going by my system, maybe a month or two, probably 2 months before it says brand new bull market. And we are at all-time highs though. Another important thing about this number here as we approach we're in all-time high territory is just look at the number here, 2945. There's a psychological price in markets that it reacts to, and 3,000 on the S&P 500 is going to be a that's a huge round number psychologically. And one of two things is going to happen next. The market is going to struggle to penetrate that psychological round number of 3,000, or it is going to get above it and stay above it. So it'll be a bullish sign if it can get close above the 3,000 mark on the S&P 500, and a bearish sign, at least in the short term anyway, if it turns away from that, and we'll see how much conviction, bravery is in this market. Just as proof of that, well, one example is if you noticed how here the market sort of like diced around with the 2,000 mark. It got above a little bit and then went below, and then but then once it's really staged a good 5% above, it's zoomed along here. So we'll see what happens next. Let's look at the short term. So, but in the big picture, longer term view, this is not yet by my system a brand new bull market, although it's certainly not bearish. It's my system still has me in cash for now though. So let's look at the short-term pictures, get an idea about the shorter-term trend, and it's up, as I've been saying for weeks now. Getting harder to say it's a downtrend. Although I did say last Monday, as I recall, that it was definitely hot even for this market. We did see over the last week this drop. What happened on Friday though is, despite that drop I had predicted, it bounced up high and finished the week up. So how things finish up the week is a sign for the way ahead. Hard to say anything other than that it's looking up again this week for the short-term trend. Let's look at what else is going on and see if we can see any signs as to see is this a phony market? Is this a phony market? How justified is it? Well, there's a couple of things I'm looking at right now. One of them is the junk bonds. This is the kind of the debt bubble that's been fueling this whole bull market, and it did the same thing with the stock market. Looked over the edge, didn't like it, and turned back, and that's at all-time highs. So we never try and second guess anything. We're not going to short the market just because this junk bond incident is really an accident waiting to happen, with companies being over leveraged. But we're not going to get in the way of that until it says so. In fact, this is just triggered into this, just like the stock market, it's up and away, even for the overpriced, just ludicrously priced actually junk bonds. Let's see if Dr. Copper can tell us what's going on in the real economy, because copper is used in so many industrial processes. What's really going on out there. And let's look at the real economy. What's the demand for copper? So what we saw, and this is what kind of had me more bearish as well as we went into the new year, was copper was looking actually like a perfect short right here, as it just kissed its descending moving average. But again, we're not going to second guess it. And then you look what happened next. It got back above the moving average, and now this last week had a bit of a pullback here, but in the meantime the moving average is pointing up. So this is actually, fairly promising situation now for copper. At the very least, I can't see any warning signs in copper, at this time. So that's hard to fault the real economy right now. Strange as it may seem, it is what it is. Let's check in on Bitcoin, because we're seeing the resurrection of that too. And here it is. It's managed to get this back above this 40-week moving average. That's still descending, but we can now start to see that curl up like we've seen in copper and junk bonds, etc. Then the show will be back on the road. But you can't say anymore, looking at this picture, that the cryptocurrency complex led by Bitcoin is in a bearish situation. It's kind of neutral right now. And so that could be, for now, the worst of Bitcoin. It would appear, looking at that. So I had a little stock we've been commentating on here is Campbell's Soup, because it's soup and it's so simple. And you can see where it was up here. It pays about 4% dividend. Just one little sort of keeping eye on here, and that's still fine. It's still above its 40-week moving average. It's got its work cut out, going to slowly. But that's just one of those things. It's just one of those trophy assets that you can buy and hold and get paid to own it. So that's all for this week, and I will speak to you next time.